For struggling homeowners, Bank of America just isn't making the grade. A new report says that the nation's largest bank is one of the worst performers when it comes to modifying loans, and other big-name banks are also listed here. Here to tell us about today's Treasury report is Don Kopecki. Don, this reads like a list of those who are at the top of TARP fund receipts, yet they're having a hard time going ahead and allowing the renegotiation of some of these loans to keep people from facing foreclosure. Who is on this list?
Well, Wells Fargo is, and Wachovia are also at the top of the worst performers on the list. JP Morgan Chase had some of the best performance. What Treasury did is they looked at how many loans these banks had that were eligible for modification for the president's plan, and then looked at how many loans they've actually modified. And Bank of America had modified just 4% of eligible loans, and Wells Fargo just 6%.
Wow.
Wachovia was at 2%.
At 2%. Why are they having these problems?
Part of the problem is the president's plan was announced in a piecemeal fashion, and a lot of times the president was announcing details of the plan at the same moment to consumers when banks were getting details. And the banks have complained that it takes them several weeks to put those changes into their systems, just the technology in and of itself. A lot of banks laid off a lot of staff over the last 2 years, and they have to ramp back up. It just takes them time. They're having a hard time keeping pace with demand.
So the banks themselves are finding out the practices that they are going to have to adapt to or, take on themselves at the same time that the public's learning about these policies?
Yeah, that's been a big complaint. The Government Accountability Office mentioned that in a fairly scathing report about 2 weeks ago, criticizing Treasury for announcing programs before the details were even final, for placing the burden on banks to implement programs that the Treasury hadn't released guidelines on, and for adding to confusion of the public. Because when Obama comes out and announced this plan in February, none of the systems were in place. They hadn't even finalized the details of what they were going to pay the banks, the incentives they were going to pay them. And then that created public demand right away.
So, what are the banks doing themselves? I got to imagine that they're lobbying pretty hard for, some sort of greater voice or greater insight into the Treasury and into the programs.
They are. They don't want to take all the blame for this not going the way, Obama had envisioned. And they've complained publicly, fairly vocally at hearings, that the administration needs to be more consistent, needs to share with them the details to see if it can be implemented before they announce changes to the public. So they've asked that. They've asked the administration to streamline some of the paperwork and other processes. It's a very complicated program that has tiered payments to servicers based on the success of the modifications.
So what's being done to fix this besides, lodging the complaint itself? How are they changing the making homes affordable policies?
Well, the Obama administration is still rolling out details to different aspects of the plan. On Friday, they announced new details, a very complicated formula to pay investors, the people who actually own the mortgage bonds, a tiered structure of payments for loans that are modified in areas with declining home prices. But even those details, the banks are just starting to implement those now. And right now, it's kind of a blame game in Washington.
Yeah, I can imagine. It's definitely capturing public and populist interest right now. Thank you, Bloomberg's Don Kopecki in our Washington bureau.